Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you one bad trade that I do have in my portfolio. That's right. I currently still do have this trade in my portfolio. I'm going to show you how to manage this if this ever happens to you. And then I'm going to show you personally what I did in order to still become a winner when this option expires. Now, if you guys are looking to find exit strategies before entering any option trade, then that is one exit strategy that this video is going to cover today. If options is your thing, or you're trying to use it in order to make some extra income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going over a one bad trade in my portfolio. I'm going to be giving you a step-by-step walkthrough of how I'm managing to save the trade. And I'm going to also show you what you can do if this ever happens to you. For today's video, we're really going to be getting down and dirty with options. And our stock for today is going to be none other than Sweet Green or SG. Now, first off, let's go ahead. I need to show you how this all started off. And for that, we're going to go ahead and go to the history of Sweet Green. But right before we do the history, I want to bring some basic technical analysis to your foresight. So for that, let's go into the Robinhood Advanced feature right here in order for us to open up the chart. Now we're going to go ahead and we're going to go to the 1-year chart. And as you can see here for the 1-year chart, the current share price of Sweet Green is $13.30. The blue line here, which represents the 200-day moving average, is currently above the current price that the share is trading at. That is a good sign. That is one sign that I look for before making an options decision. So according to the 200-day moving average, the stock for the last 6 months has been trading around the $30 mark. Once again, currently the stock is trading at $13.30. Now let's go ahead and jump over to the 5-year mark. So now with the 5-year mark, once again, the current price of the share is $13.30. So if the stock were to fall down to the next level of support, which is going to be right here around the $11 price right now. Let's say you own 100 shares of Sweet Green right now, and the stock decides to drop to the $11 mark from the current price. Let's run it off to $13. That means your portfolio is going to be down $200. And that's because it's going to be 13 minus 11, which is going to be $2, and you multiply that by 100 shares. So your entire portfolio is going to be down by $200. Now, vice versa. If the share price moves from the current prices at right now, which is the $13 price, and decides to go up, let's be very modest. It does not need to go back up to the all-time high. Let's just say it goes up to, let's say, the $20 mark. So the movement from the $13 to the $20 mark is going to be a $7 increase or a $700 increase. You're going to multiply your $7 once again by the 100 shares you have. Now, the reason I brought this to your attention is quite simple. Right now, the price the share is trading at is more in your favor. If you were to get involved in this stock right now and the stock were to retract, you would be able to lose a lot less than you'll be able to gain if the stock decides to go up. And dare I say, if the stock does decide to go up, you're gonna be able to get 3 times as much as if the stock decides to go down. I just wanted to bring that to your attention. Now, let's go ahead and start off what this video is actually here for. So this is how it started. We're going to go ahead and we're going to go down to the history of Sweet Green in order for you guys to see where I got this all started. So let's go right here to show more. And what I'm trying to look for is the original contract that I bought. The original contract I bought was a LEAPS option. Remember that. We're going to be using a different option terminology as the video goes along. So the LEAPS option I bought, let's go ahead and look for it. As you guys can see from my scrolling, I have a very rich history with this stock. So here is my original contract, and I did buy a LEAPS option that expires January 16th, 2026. The strike price I chose was the $20 strike price. Now, this was when Sweet Green was trading around $20, $21. The amount of money I paid for this contract was $900. So I have one LEAPS option that cost me $900. Now I'm going to go ahead and show you the current position I do have with Sweet Green. Okay, so here I am on the current contracts I have with Sweet Green, and the whole point of making this video is to show you guys the one bad trade I have and how I'm gonna salvage this. So the strike price again is the $20 call, and now let's go down so I can give you the actual details of this trade. So currently the market value of this contract is $752. The current price per contract is $1.88. Now average cost is $3.44. I just showed you guys this original contract, expiration of January 16, 2026. Initially, when I got into this contract, I actually paid $900 for the contract. So my average cost was $900. Right now, my average cost is at $344, which is a huge reduction from the $900. So I'm going to get into how it got down to this. So the current price we mentioned a few times is $13.30. In order for me to break even on this trade, Sweet Green needs to be at 23.50. Now, Sweet Green only needs to be at 23.50 from expiration date. Anytime before that, if the share price keeps going up, then I will be making money. Now, currently, today's return, I'm down 6% or $48. Now, the total return, I'm down $625 or 45% of this trade. Currently, I have 4 contracts. So I am down on this. So I'm down on this trade. Now, the reason why I say it's one bad trade is because it's down drastically. It's down almost 50%. However, not because a trade is down means you cannot salvage it. So this is how I decided to salvage this trade. As the share price of Sweet Green kept going down, I did what's known as DCA or dollar cost average. Except for in this case, I did a DCA on long calls, meaning as the price per contract keeps going down, I keep buying into it. So my current price, the last one I bought was at $1.88. I did purchase around 3 of them. Hence, my average cost moved from $900 all the way down to $300. That is why my average cost is now so low. So this is one options exit strategy that can be used if you ever find yourself in this kind of hole. Now, this trade is not all lost, and let me show you why. Here's the thing about options and option traders. Every single strike price you choose, every single premium you receive, you always gonna be right. The one thing most of us get wrong as option traders is always gonna be the date. So the date here is January 16, 2026. That's my expiration date. So currently we're in June. So that still gives me around 7 months for expiration. So I have 7 months in order for this stock to recover. Now, I just showed you at the start of the video that the stock is at 13.30, and if it does decide to go up, let's say only up to $20, I will be positive once again on this trade once that happens before January 16, 2026. So if you ever find yourself in any kind of situation with this where you have a leaps or long call in your portfolio, if you did your own due diligence and you know the trade that you're doing is going to work out in your favor, you have a high conviction in your trade, there is no other reason for you not to double down on your actual thesis. So that's what I did with this video. I actually doubled down and I averaged down on my cost. Now, for this stock, if this stock does continue to go down, believe it or not, I'm going to pick up some additional contracts. Now, there's always 2 requirements I ask from my subscribers and my viewers. Quite simple requirements. Always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second thing is always make sure you have an exit strategy before entering any options trade. Because I had an exit strategy before entering this trade, I was able to come up with a solution in order for me to at least salvage this trade. So, exit strategy number 1 is going to be I have a long enough expiration date in order for the stock to recover and for me to be positive again on these option contracts. Strategy number 2, because the share price went down so drastically, I was able to go ahead and buy additional contracts, which helped me to lower my cost. So there you have it. I always talk about exit strategies. Right there, you have two. Now, that is one bad trade in my portfolio, but I guarantee you, almost guarantee you, that this trade is not going to end up bad. I will continue monitoring this trade, and if as it develops, I will continue to make a video so you guys can go ahead and continue following along with me. Now, the option strategy I used here is going to be a LEAPS option I bought first at a $900 cost. When the share price started to go down, I started to purchase long calls. There is a difference. If you guys do not know the difference between the leaps and the long calls, let me know in the comments below. Now, the third option strategy I use, which is going to be DCA, which stands for dollar cost averaging. Most of the time when you hear DCA, it's always associated with stocks. In this case, you could also DCA on your leaps option as well. Now, there you have it. This is the one bad trade I have in my portfolio, but it's not all gone to hell as yet. I have full confidence in this trade. In addition to that, if the share price continues to go down, I will continue to add additional contracts to my position. But remember, once again, do not do what I'm doing with my portfolio. I just make these videos for you guys to see that all the time when you doing options trading, it doesn't always go your way. But if you do have enough time for the trade, it will always work out in your favor. So there you have it. Go ahead, like the video. Subscribe to the channel for more real life examples like this. But most importantly, hit that notification bell to get an alert whenever I post a video. And if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that 9-to-5 job. Now, until the next video, keep pushing your investments.